Yeah. What's up, everyone? I think we're live. That should be working fine. We have something to share today. We wanted to do kind of a Q&A. We started thinking about different topics, but we don't have any topics. So we'll just go with different questions, different anecdotes, things we talk about to help you improve your trading. I was sitting once again this morning with Mandy. What's going on, Mandy?
Good morning, everyone. Well, I don't know if NTV Games is already here, but here's my weather report. It's been raining like crazy. So we had 4 weeks
Oh,
of drought, no, 8 weeks of drought, no rain at all. And it's become pretty bad because number one, everything is yellow, like the grass is burned. But also what happens is that when everything is dry, of course, we have a lot of fire season here in Australia. And so that is always a high risk. And what happened, we had really, really bad fires as a result of this. Oops, just loading my screen. Now, hi Naga, hi Ken, hi Kimo.
wonderful.
The surf conditions are great because it's really windy here. And so we had such a rain yesterday that all the streets were flooded, and you had to be like really careful not to end up like a lot of drivers that drive into the floodwaters and they get stuck. And that really reminds me of trading, because trading is the same, right? So we had like this beautiful conditions. Everything was sunny and calm, and traders were doing really well. And in the last few weeks, we just had like a deluge, like rain, like the rain that we had. And what also is at the moment, we have the Formula One here.
All right.
Chick. We have
So,
the
so
Formula.
for people who
Mhm.
don't know you exactly, who've never seen you before, just take a few seconds to introduce yourself to people, who you are, what you do, and where they can find you.
All right. Well, my name is Mandy, and I have been trading for over 15 years now. Been working with traders, so in coaching, mentoring, speaking gigs for over a decade. And my website is tradingpsychology.com.au. And Etienne and I, we are running every Sunday, my Sunday, your Saturday most probably. We're running like half an hour Q&A sessions where traders ask us questions about trading mindset, and then we answer those questions. So yeah, yeah, it does feel good to be in my 20s. Thanks, Kimo. Fantastic. Hi, Sean, FX.
Love it. That's awesome.
Hi.
Wonderful life. I don't know if it's the time or the day, whatever, or it's from the one people go back inside and they don't go outside. I don't know. No
Yeah,
clue.
most
But
probably.
welcome, guys. And if you're watching this, comment in the chat. We want to hear from you as always. And if you have any questions throughout the lives, comment in the chat. We want to make sure we answer questions. Because, like we say, the best one we have are the one where people ask questions, they comment, and you get more value, and we can answer your question all the time. So that's always awesome. Wonderful.
Exactly.
So, yeah. So, what's up with Formula One in Melbourne?
So yeah, we have the Formula One here at the moment, and I live pretty close to the racetrack, which is in the middle of the city. So I live close to the city, and so I wake up in the morning to the sound of the revving car engines. At 7:30 or 7:20 this morning. That was a bit rude, but that's okay. Um, and it was really interesting because the drivers have been here over the last week already and have practicing their training laps for the race. But now it's raining really, really strongly, so the conditions have changed. It will be interesting to see if the drivers perform differently as well. And this is really like trading is, isn't it, Etienne? We have so many different conditions under which we have to trade. And it's like for the race car drivers, they travel around the world. There's different tracks. So the track here in Australia is very different to the track in Malaysia, very different to the track in Monaco. And not only because of the way the roads are being built, it's also because of the weather conditions. And trading is becoming a master in number one. I think this is one of the biggest challenges traders have, to identify what trading situations we have, conditions, that's the word I'm looking for, what trading conditions we have, and then to adjust accordingly. So I was working with a trader who's been doing really, really well in scalping, but the market was beautiful because it was going up and down, like a beautiful wave, right? Like gentle waves. So on Thursday and Friday, he was trying to do the same. So he took his shorts, made really good money, and then thought there's a long position, a scalping long position, of course, went long and just got killed. And all the money that he made in his short, he lost again. And that happened like 3 or 4 times. And he sent me a Skype message saying, "What's going on? I keep making money and then I lose it straight away." And I said, because the conditions have changed. Now he's a young trader. He hasn't been trading for long. He hasn't seen conditions like that. All he knows is the market going up. So that's why lucky, he asked me, because then I could explain to him, this is the market, an impulsive market. You do not go against the stream. It's like the deluge that we had yesterday when the rain's coming hard. You just, you don't drive into the floodwaters because it's going to kill you. So yeah, I think that's the hardest bit for traders when they haven't been through those different conditions as yet.
Yeah, totally. And I've been in that place where I didn't know the condition first, and I just went and applied the same thing, but failed, and that didn't work out really well. But so the conditions are different. Like it's never the same thing, never the same market, never the same race track. But the process remains the same. The process remains that you start with looking at what's happening. And I think a lot of people like that. So I'm curious to know if you guys are watching this live, comment below if you have some sort of rule or some sort of process to look at what's happening first in the market and then act based on that. I think that's really crucial. And a lot of people don't do this, unfortunately. So
Yeah, and I had to learn that as well over the years. And got caught a few times pretty badly. So I remember 2002, I started trading, and then the market was pretty short. And then overnight, so the market came down because there was the fear of a war, the Gulf War, I think it was. And then I was short, that's all I knew. And then I remember it was this night in March, and I was short, and I didn't have much money. I had a $2,000 account, and I at the time there was no online trading, so I had to buy stocks. And I woke up in the morning. That was when General Schwarzkopf had invaded Kuwait or Iran. I can't remember what it was. It was some sort of Gulf War Creek. Creek was German, sorry. Gulf War. And overnight, everything jumped up, and that was the beginning of a new bull market. And I didn't understand that, so I lost all my $2,000 account in that night and following, because I thought it's going to continue to the downside. But then I understood what that meant, right? That there's a bull market. And then I went back, and it was really interesting because it was exactly the same setup like in 1990, 92, when there was another Gulf War. And if you look at the charts, they look exactly the same. Like you could overlay them totally. In German we say gehutzt and gesputzt, so exactly the same. Now then the markets kept going up, and then of course 2007 2008 happened, and the markets started to become very impulsive to the downside. And that's why I have been through that market already. I recognized what was happening in this market in the last few weeks. And also, a Twitter friend of mine, Red, he made a little comment saying, look out for the NASDAQ. It's going to come down. Now he's got his own fund. And so I thought, I put on a contract and see what happens, put my stop loss in, and it was a massively good trade. So it's also coming down to learning from more experienced traders, more successful traders, and traders who kind enough to share their experiences as well. So I'm very grateful. I was very lucky for that as well. Plus, of course, being short Mr. Dex, like a world champion as
yeah,
well. Mm.
that's awesome. And that's pretty much how you learn the most, by looking at other people and watching other people. And I see there's other people who follow these videos and they like this the trade setup that I share sometimes. But I want people to be careful with like looking at trade setup and trying to copy them, because a lot of people do that. So yes, you need to watch and learn
Yeah.
and try to get inspired by this, but don't copy other people. And that reminds me of how many you talked about one time how you created your strategy. You take part from different people. So I'm kind of curious if you can share more about this, because people like to hear about that topic. How did you come up with your first strategy? And kind of what part did you take from who exactly?
So what happened was I'm the kind of personality I have to study everything. And this is also my buying strategy. So I used to drive my my mom crazy as a kid already when we had to go buy shoes, because I would walk through to every shoe shop in the city before I chose a pair of shoes. Now that said a lot about my mindset, the uncertainty that I had as a person, and a lot of my trading journey was to find the certainty within myself, and not needing to go to every shoe shop, but knowing exactly what I want, and going for that. So what I did in trading, I did exactly the same. I studied every trading strategy under the sun that I could find. So I studied chart patterns, I studied candlesticks, I studied Elliott wave, I studied Gann, I studied Ichimoku, everything I could find. But of course, because I'm my own personality, I'm my own person, I could not replicate the success that people talk about that they have. But what I did was, for example, when I studied harmonics, I'm not a harmonics person because I don't have the brain to dot big pictures to connect the big picture dots. This is what you do in studying harmonics, like bet ABC and so on. Now, yeah, paralysis by analysis keyword. I did end up with shoes though. It just took a few hours. Never had to walk bare feet. So I know now that my brain is not wired for the big picture stuff. And why would I try to learn something that is not naturally what I'm good at? But what I really resonated with was Fibonacci. So of course, now I use Fibonacci in my trading. That's the only thing, the only pattern that I took out of harmonics is the ABC pattern. Which also coincides with Elliott wave. Now, when we look at Gann, for example, Gann has certain moving averages, which are multiples of 12. So Gann loves his numbers, and his numbers are from the Bible and have a meaning and a sense. And I really connected with the 144 for gold, the 216 and the 72 moving averages. Now, I don't know exactly what the reasoning behind that is. All I can see is that there's a correlation between Fibonacci, those moving averages, and where price seems to get support. So if it is a 200 or 216, often doesn't make much difference in the big picture charts. So I'm not really fussed because a lot of traders use the 200 moving average. So all I took from Gann was those three moving averages, because they seem to work on different time frames as support and resistance areas, as well as the time and price idea. So when price has been running hard, like a car driving really, really fast, like a race car, right? They have to go into the pit stop and change get more fuel and change the tires. Now charts or price does the same. It goes up really, really hard, and then it plateaus. It needs to change the tires, needs to get more fuel. Then it goes really, really up fast. And now it does the opposite, right? It dropped really hard. And now let's see what it's going to do this week, if it's going to plateau because it needs new tires and new fuel and new oil. And if you then continue to keep dropping, or if you go up or down. I don't know. I'm not a big picture person, as I said. So you see that from everywhere, I took a little piece and put my trading strategy together. Chart patterns. I studied all the chart patterns. Grateful chart artist, we are actually recording this, so you can always go back and watch it again. Thank you for the feedback. It's really good here to know. So chart patterns, I studied all the chart patterns, and I noticed that I'm not good at continuation chart patterns like triangles, like bull flags. I just don't perform with them as well. However, I perform really well with reversal patterns like double tops, double bottoms, V reversals, right? And how do I know that? Because I keep my statistics. So it's not that I feel about, oh, that feels good, so I do. Hey, Arthur, how's the weather in Sydney? We got your rain. So it's not that I feel a certain way about my performance, that I say, I know that I do well because I like trading reversal patterns. No, I have it in black and white. These patterns I perform well, these patterns not so well.
And I think what other people are going to mistake with that is that they're going to try doing something, you try to learn, let's say, chart pattern or whatever they try to learn, and then they try to trade, and they have a series of bad trade, and then it's their emotion that get triggered with they're not good at that, so they don't want to trade that because they felt bad trading that for some time, and then they go to something else. But the problem with that is that the more you do this and the more you trade different things, your emotion always get triggered because you always get to a period of loss, like inevitably. And so you keep going system and system, and you think that you're bad at all these things while you didn't really look at the data completely. That's the big mistake that people make. So.
And this is such a great point, Etienne, because you could have started with using that pattern at a trading environment where this pattern doesn't perform. So here in Australia, we don't have that, but in Germany, we have winter tires and summer tires. So when you, or the Formula One, I know they have like tires for when it's a wet surface compared to tires when it's a dry surface. It needs a different rubber. And so when, let's say, reversal patterns are for rainy environments and you need wet tires, but then the sun comes out and everything is dry, that pattern doesn't work. The tire doesn't work as well, doesn't perform as well. So you need to change your tires, or you need to wait till it rains again before you drive, right? And it's the same with those patterns. Ken, I hope your power outage is going to resolve. I actually have a story about a power outage. I hope you guys want to hear my story. That was so bad. So I was trading, was in 2009, and I was trading full time, no coaching, nothing, just trading, doing my thing, having a good life. And so it was late at night. It was 11 o'clock at night, and I was in a trade, and I put quite a big position on because I think it was after an announcement, and it was a beautiful reversal pattern. And as you guys know, hi Alejandro, good to see you. And as you guys know, I scalp. So I was in the trade just for a few ticks. But what happened was, there was a really loud bang and all the lights went out. And not just in my house, everywhere, in the whole suburb here in Elwood. And what happened was a car hit the power pole. That was one really central power pole for all the area that I was living in, and no computer, nothing. And I was like, fuck my trade. So I got my phone, right, my iPhone, and tried to get into my trading platform. And by the time I got in, I was in $1,000 loss already. And then by the time I clicked the button, I was in a $2,000 loss. So I even have to cough when I remember that pain. So that's what can happen when you have a power outage, something that I never considered. So make sure that you have like is it called a PSU, like a power supply, like a backup power supply or something, which I don't think would have saved me either, because internet's connected to the phone box, and the phone box I think needs electricity. So always have your phone charged and ready to go in case you need to manually do something with your trades.
Yeah, that's a great unexpected tip, but really useful if you ever come to that situation. For sure.
UPS, thank you, Alejandro.
Yeah. By the way, grateful shout out this great job on a comment on the video recently. I didn't have time to reply or look at everything, but some great piece of advice and some great feedback. Really appreciate. It's awesome. What's up, Archer? That's great. Alejandro, I had a good talk with Alejandro a few days ago with the Academy Mastermind call, and there's a lot going on there. That's awesome. Hope you're doing the work, but that's pretty good. Wonderful.
Hello, Subi from California.
Cool. That's great.
Oh,
if you have any questions, comment below in the chat. We'll make sure to answer them as always. And that's going to be good.
It's really interesting, Alejandro, that you say that, because in South Australia, in Adelaide, there is like a massive Telstra battery that is helping, because we have a lot of problems with power electricity here, because we export all our electricity overseas. And then we have, when it gets hot and everybody's using their aircon, we actually run out of electricity. So indeed, in Adelaide is this massive Tesla backup battery, and that's interesting. The world is changing, with Tesla. Yeah. Any good reads on GAN?
You have to answer this because I never ever studied GAN, so I have no clue what that's about.
Do you mean books, Secret TMG? Do you mean when you say any good reads? Do you mean books?
Yeah, that's probably going to be books. Do you have any books on the
Yeah.
topic?
Well, I did a training on GAN with an Australian guy here, and it still went over my head.
The
Let
funny,
me think. Mhm.
yeah, the funny thing is that some of these things you learn really, really early on, you kind of have I don't know how to say this, but you kind of don't want to get back to them because you have a bunch of losses because you do things wrong at that time. But then you kind of evolve and you do other things, so you don't want to get back to the other things until you kind of realize that you did other things bad at that time, and that you're
Yeah.
willing to go back to them. So some things like I started to trade the very first time. I think first time I used indicators was with Ikenashi, but those are things I never went back to. And like some people tell me about them today, and I always think this first time where I traded bad with them, in the very beginning. And so that's something that happens. But you have to understand that, and those are good indicators. It's not because you lost with them in the very beginning of your trading that you cannot go back to them. If you see that they can help you right now, then use them. That's totally fine.
You sound like my shoe buying strategy.
Yeah,
You know
pretty
how we
much.
then go
Yeah,
back to the first shop and get the shoes that we tried on first.
yeah.
But
I
then
didn't
we
go
have a
back to them, but yeah,
comparison, right?
it's a good way.
If we only have tried one avenue, we don't have a comparison, we don't have a benchmark of what's good and what's not good. So as we become more experienced, and you can imagine as I get older and buy more shoes, I have a better shoe buying strategy because now I know what my benchmarks are for the shoes that I want and the shoes that fit me. And that's the same with our trading strategies. So when we start out, we don't have a benchmark of what suits us, what works for us. And as we become more experienced, we remember this is something, how I say continuation patterns. It's just not me, not my preferred trading way of trading, but reversal patterns. So then I start honing into finding more reversal patterns, right? And I have 3 different strategies for 3 different market conditions. And the 3 different market conditions are a volatile market, like we had in the DAX for a few days, for a creeping market. And the creeping market is something that I learned from Tom Dante. Hallelujah. Saved me a lot of money when I learned about that, because it's this market that, especially in scalping, really fucks with your screws with your mind. So we have a tick up, tick down, tick up, tick down, tick up, tick down. But when you look at the big picture, it goes up. But when you look at the smaller time frame, as I do, it's you constantly have reversal patterns that fail and really, really stuffs up your trading. And then when I recognized, when Tom spoke about the creeping market, I was like, oh my God, that's the one. So now I have a trading strategy for a creeping market as well. And then we have, of course, the strong impulsive market like we had in the last few days. And so it's really important that you use your trading strategy and you put it into the different context. And anyone who says follow your strategy to the T, no way, you're going to kill yourself. You follow your strategy to the T of that market environment. Now, that is very different to following your process. There's a difference between process and strategy. Yeah? So really,
Totally
really
get that.
important.
And that's a small distinction, but kind of a big one at the same time. And that's why I have a very hard time going all the way to kind of systematic strategies and just systems, because for me it's impossible. There's always a small thing that I feel doesn't work, and I don't want to place a trade for that situation. And most of the time, I'm right with that. And so that's why I don't go all the way to systematic. Although it's kind of a process, it's still like a process step by step. But yeah, it's a thing that it's not always
Amazing, huh?
yeah, it's impossible for you to go all the way to just like strategy and systematic and just So
Yeah.
interesting.
Grateful Chartist, I start off with the 1 minute. so I do my analysis top down. So I start with a bigger picture, drill down into this detail to get my entry. And then I keep in my trade going into the bigger picture again. So I stay in my trade as long as the 1 minute chart satisfies my requirements. And on Twitter, I have a few examples of how I trade. I try to post charts just to give an example of how I look at the markets. And then let's say 5 minutes are through and I'm still in my trade. Then I look at the 5-minute candle. Let's say then I'm still in my trade. I look at the 15-minute candle. And so I start looking at the bigger picture. But I start off with the smaller picture. Now, what is also interesting, what you mentioned before with the timing. So you learn, and that's for you, Alejandro, as well with the robots. We start applying our strategy in a certain market environment, and then it's the wrong timing. I want to give you an example. A friend of mine, Alpha Hub, he on Twitter, he has a little trading fund, his Itchy Scalper. And I told a friend about Alpha and said, look, if you want to invest with him, and I don't get any commissions. I just do that, I love to help my friends and connect them. And so, and Alpha's performance is just amazing. He's an ex-Goldman Sachs guy, and he's just doing phenomenally. But so my friend invested money with Alpha, and then that was the month when Alpha lost money for the first time in a long time. He's got like a 60% return on his account, right? But that month he lost money, and then my friend got worried, and I said, "Don't worry about it. Alpha's going to make it all back. That's just part of trading." And you can also see, and I had a chat with Alpha, and Alpha's like, "Yeah, don't worry about it. It's all good." You can see that people, that traders, especially when they come from the institutional background, so they have this trust in themselves. And when they have a time when it doesn't work so well, they don't worry. They just sit it out. So he turned off his robot for a few weeks. That's for you, Alejandro. And then waited till the market environment has changed, and then has and then performed well again. And what I see a lot with traders, especially newer traders, they have those unreasonable expectations that they always have to make money, and they feel bad about themselves if they don't. And I love to show Alpha's equity curve, because you can see this little dip. So we have this equity curve to the upside, but there are little dips in the middle, and that's all right. It's still an equity curve that goes up. And so what I meant to say is about timing is that my friend got into the fund at the time when it started to not work so well. And he could have easily said, "Oh, that's all bullshit. It doesn't work. And this guy doesn't know what he's doing." But he stuck with it. And he now, is well ahead. He has had a really good month since then, and made all his money back and even more. So this is how important timing is. And just looking at what Alejandro says with the robots, they can auto turn on and off.
Filters.
This is so cool.
Yeah. This is something, I don't know, Alejandro, if you listened to the interview with, oh my God, what's his name? It's a recent one with Matt DeLong. That's basically what he's working on. It was quite advanced, but yeah. You could check out that interview recently. That's pretty.
Matt DeLong. Yeah. Cool. So Alejandro says he wants to integrate a filter into his robots so they auto turn on and off in different type of markets. And that is, that's fantastic.
It's pretty cool. Secret MG. Yeah, we talked on Facebook recently. I do remember. It's been a couple hours back, but yeah, totally remember that.
Cool.
Yeah, the other thing that's fascinating with institutional guys and people in big companies is that they have like completely different expectation than retail traders. Like when you see people who expect to make 200% per year or per month, those guys, they're totally fine with small return. They completely shift your perspective of really what you have to aim for. Like they're aiming for like 20% per year. They would be super happy, and they will be getting a lot of money for that. while you think that you have to make a lot of money trading, and it's not really the case. You just have to make proper return, and you will be totally good with that, which always fascinates me. It's crazy.
Yeah. And that is also a really good point, where even traders who know that it's unreasonable to always want to make profits, they still feel bad when they don't make those profits all the time. And that is really interesting, because very often, children, they grow up in stressed homes, and they didn't have time to just be. It's a lot of survival, emotional survival, because they have judgmental parents, or they never get appreciated. All their needs are being met in terms of food and shelter, and taken care of on the external, but not on the internal. And so what happens with those children is that they are actually creating a lot of cortisol already, and that inhibits the brain development. And then we get traders, they're grown-ups, and they get into a situation where they're under stress with trading, and they can't perform, they can't press that button, that mouse button. And that often leads back to the childhood, um, when they had the fight and flight response already ingrained in them, and they never had a chance to deal with it, to process it, to grow out of it. And then they become adults and get into the market, and all this is being triggered again. So when we have a trader who is not able to press that mouse button, often it's because of the cortisol that is being triggered again, because it's a reminder somewhat from what happened in childhood, and they got literally blank in their brain. They don't know what to do. And so what needs to happen is they need to recover. They need to do a lot of work on themselves in order to recover those parts and to actually grow out of them. And that's why I say every single trader can become successful. They just have to do the work that they need to do. And every trader has to do a little bit of a different work. And it's just about finding out what is your individual gaps and covering them.
Yeah.
Yeah.
So,
So
what would be your advice for people who want to start to find how they can find their gaps?
it really starts with self-awareness. It starts with I often ask my traders, what did you feel right before you made this mistake? So let's say I work with a trader who is not disciplined in terms of he's doing really well, and then he jumps into the trade. And I say, just before you jumped into the trade, what happened? And then trader said, I have a blank mind. And that tells me cortisol, right? And that happened even before he got into the trade. What happened just before your mind went blank? I had this feeling of fear of missing out. Now I know it's a fear-based feeling. What specifically is that feeling? Where is it? So I always ask, where is that feeling? Not because I want to make you feeling lovey-dovey. It's because the feeling is often the trigger that precedes a certain behavior. When we are able to pinpoint what the feeling is, then we can start to actually become proactive in our trading. So I always say I feel this all familiar feeling of superwoman creeping up when I have had a row of really good trades, trading days, trading months, and I know it's time for me to stop, to take a break, and to get back to basics, to get back being humble, because now I'm at the biggest and highest risk to make a mistake. And I was tweeting recently about, I tweeted my entry and I tweeted my exit. And the price, so my exit was when price came above the middle Bollinger on the 1 minute. And then middle Bollinger went back underneath. And I tweeted, I said, now I feel the urge to get back into my trade, but I know out of my experience, this is the most dangerous time for me to get back in the trade, because this is normally when I stuff the trade up because now I have superwoman syndrome. I'm not cautious anymore. And it's the opposite of having a blank mind, having too much cortisol. It's not good either, but it's the same outcome, right? Both create bad trading results or losses. And I tweeted, now I have to step back from my computer, and boy, am I lucky and glad and happy that I stepped back, because price came back down and then slingshotted back up and started to move up like, 100 points. The DAX did like massive moves. Knowing that has been years of self-awareness, of looking at myself, of writing down what my triggers are. Now I know what my triggers are, and now I can manage myself in advance. So, because once we are in the shit, once we are in the sewage, it's hard to get out, right? But we can prevent ourselves to even get to that point where it's hard to press that mouse button, where it's too hard to get out of the trade. Yeah. And that's when trading becomes so much more pleasant and fun and successful.
Yeah, totally. And that shows also how easy it is to, well, it's not easy, but it's quite simple to solve problem you
Simple,
have in
yeah.
trading. Yeah. So you can have a problem, but once you spot the problem and you find a solution, which comes like automatic after some time you do it, it's quite easy, it's quite simple to solve any problem you have. Not easy because it might take time, might take practice, might take repetition, might have to turn this into a habit, but it's quite simple overall, the process. And that's how I solve my mistake as well, or my disadvantages, or like anything I'm bad with, pretty much.
Now, Anmol, hi Anmol, Anwar Rama is asking a really good question: how to keep investors calm if you have a losing month?
One thing I want to say is listen to the interview with Ray Barras on this channel. It's really showing everything he does. Basically, I think it's the most down to earth, the most simple, and the one that makes more sense. Yeah.
Yeah, Ray Barras is an amazing guy. So he lives in Hong Kong.
Yeah.
Very, very experienced, this guy. So you will get a lot of great insights.
Also, episode 135 of the podcast, in case you listen to the podcast.
Awesome.
On the go, yeah. Great. So do we have any questions in the chat that we need to answer?
Mm-hmm. So Secret Team G, fundamental versus technical, which one has more force to push the market? That's a really good question. And then I had chat with my, and I'm sure you asked this question as well, Etienne, right? Had a chat with my hedge fund friend about this, and he always says to me, fundamental gives you the direction, and technical gives you the time when to hop on board, when to hop on the train, or when to start your car and start driving. Mm-hmm. And I love that. That so makes sense.
Yeah, that's how I would see it too. But see, I'm a pure technical trader because that's what fits me. And so you have to go to what fits you, not necessarily what moves the market. And I think it's good to know what moves the market, but how you'll apply it to the market is ultimately what's most important, I think, in my opinion.
Yeah, so many traders, they have called the turn, and most of them were actually macro guys. Yeah, interesting. Yeah, it's hard to say, it's not that one has more force than the other. It's like you have to use them together as like the wind and the sun and the water, like the elements of the world, like an orchestra even. They work together as a team, I would say.
Yeah, really good with that. Yeah.
Going to flip. I'm going through the process of nice, well done. Yeah. Cortisol, well done. That's awesome. Thank you, Going to Flip, that you've learned so much. Please ask us any question you have.
Yeah.
Gastrointestinal pains. I know about them. I still have that sometimes. My average pip target, I don't have that. I don't have targets. I am a freedom fighter. I love my freedom. I don't work well with targets.
Well, the other thing to mention with pip is that it's going to depend on every currency pair. So like if you aim for 50 pip all the time, you're going to, sometimes I'm high, sometimes I'm really low. So yeah, you have to go based on, I think, technical level if you want to push it that way, or just say what your target. In my case, and many do it differently anyway. So there's a lot of ways to go about it.
Yeah. And I know traders, they use the 1-to-2 risk reward ratio, and they're doing phenomenally well.
Yeah.
Or they use 1-to-3, and they have maybe a lot of losses, but when the profits run, they run really hard. And I know one trader has like a 35% profit loss ratio because he's using a 1-to-5 or something crazy profit and loss ratio. But man, this guy is doing so well. It's just crazy. And it works for him, right? He doesn't care if he takes little losses here and there. And he doesn't care if he misses out on profits because he's not in for the little profits. And he's a big trader, It's really different when you have if you have a few million or 100 million to work with, or if you have a few thousand to work with. It's also something um, to consider. What do you mean with average pip per trade, Grateful Chart Artist? Quite sure what you mean. Most of the fundamental are already discounted, isn't it? They say that technicals are they say that fundamentals are expressed in technicals most of the time. Now, I see that most of the time, let's say it this way, but I have seen it where markets seem to have a clear reversal pattern. And then now with the bots, that has changed a lot, where then the bots come in and screw it all up. So I remember it was 2 weeks ago when the DAX was coming down hard. So we were already in a downtrend. But on the 5-minute, it was really interesting to see every time price hit the middle Bollinger, the price jumped up on the DAX, came down, jumped up, came down, jumped up. And so I was asking my friend, and he said, no, it is the bots. Because I was like, really? Would the big players use a middle Bollinger Band as an entry for their bots? And he said, yeah, they just cook with water too. And I thought it was really interesting that he said that. Yeah, I learned a lot from him. He's a good guy.
Yeah. I think I'll start wrapping this up, but any last piece of advice or any question, Mandy, you want to answer before we wrap this up?
My average pip collection per trade. Grateful Archatis, that really depends on the market. So at the moment with the market, I run like a world champion. A month ago, in January, my pip target would have been really, really little because there was too much to pop and chop. Right now, it's just easy going downhill. So I have a really, I stay in my trades so much longer than I would usually stay in. I have to leave at 1:00. So thanks, Etienne, for helping me to be on time.
Love it. And also you guys are already part of the academy. I've seen Alejandro today. I think I've seen other people. NTV Games not here, but Naga is part of the academy as well. If you guys are part of it, just check out I didn't put a link, and we don't promote all the time, but check out the tab on the website, thisarthur.com. It's a tab for the academy, and use the code Mendy if you decide to join. So we know that it's from this video and that you'll have a discount as well at the same time. And that's going to be it. So everything is there, like all the description, everything included and all that stuff. So if you're thinking about it, or if you've been thinking about it in the past, then that's going to be a good occasion to join. And look forward to help you and work more with you, of course, as always.
Thank you, everyone. Have a great weekend. Easter's coming up soon, too. Lots of Easter eggs.
Love it.